Okay, tribe, let's jump into it. Day trading school, we're still in first grade, but this is like the last semester, and we're just gonna pretty much wrap up by talking a little bit more about the financial instruments that we trade. We're gonna go over a few different ones, right? Because I know we've been talking about Forex, so we're gonna make sure we talk about the Forex pairs that we kind of focus on currently at the Unlock Academy, even though there's no limit. And then also some other kind of things that you could day trade as well. Then I also talk a little bit about tools of the trade. You know, this is an important course that we have and you have access to. And then also a little bit more about pips. I want to watch a video or two on pips just so it can kind of grow into your brain, because I know, you know, we tapping into our inner child when it comes to learning. And we know as kids, one thing that really helps us learn is visuals, and that go along with the audio. So I really want to show you a couple videos just to go along with what we already covered. So yeah, without further ado, let's jump into it. I do want to talk a little bit more about some of the pips that we talked about. So this is for, remember, we said there could be two different kind of setups, right? We got the JPY quote, and the quote is just how much this currency pair is currently going for. Or it can be every other quote is going to be different. It's going to be about 4 or 5 digits. So 5 digits versus just 3 digits with the JPY pairs. So we are on the 5-digit ones. This is what it would look like. And remember, when I say 5, I mean 5 digits after the decimal point, because you can have a bunch of digits before it. But when we say 5, we're talking about after the decimal point. Okay. So what we have here is that, let's see. Cool. So this right here is cool because it shows us, just like we would in elementary school, how to read decimal places. Okay. So this very, very last number here, right? This 2 represents 0.2 pips. This is not even a full pip. It's a fraction of a pip. So 0.2, you can also think of this as, I want to draw this one out. You can also think of this as 0.2 as a decimal point could also be thought of as 2. If you move this decimal point over 2 spots, put it here, and then you put a 0 here, that can also be thought of as 20%. So I say that because that 0.2 is pretty much 20% of 1 pip. So it's not even a full pip. It's only 20% of a pip. If that was 0.5, that would be 50% of a pip. All right. The full pip is this one here, that 4th digit. So remember, most of the time, we're not even caring about that last digit. So don't even think about it. When T.bot sends us a signal, it's only these first 4 numbers. Okay, these first 4 numbers. All right. So that feels good to know, right? That feels real, real good to know that this is all we really need. Okay, those first 4 numbers. Okay. So that 0.2 just means 0.2 pips, or it could be 0.3 pips, 0.4 pips, 0.5 pips. Now, once we start getting into this number, this represents 8 pips. So if the number goes from 1538 to 1539, that's 9 pips. Now this represents 30 pips, right? This is the 10th place. This is the hundredths place. This is the thousandths place, and this is the 10,000ths place. So if this number goes from 1.1538, 1.1538, and this goes to 2.1538, tell me, somebody, how many pips did we grow? Type in the comment section, how many pips did we grow? Talk to me, chat. Talk to me in the chat. How many pips did we grow? Thank you, everybody. Thank you, thank you, thank you. Okay, tribe, thank you. Needed this energy, y'all. I really feed off of your energy in the chat, so thank you. All right, 10,000, 10,000. Everybody who said 10,000 is correct. This will be a $10,000 pip. This will be a 10,000 pip change from 1.1538 to 2.1538. Okay, that's 10K pips. Anybody confused? If so, type a question mark in the chat. This pencil is so hard to draw with. I swear my handwriting isn't this bad. I swear. Okay, Sabrina says she doesn't get it. Okay, cool. So 1 pip is way over here. So this 1 pip move would be just from 1538. So if this moved from 1.1538, if that changed to, you know, over a minute or 5 minutes goes by and now the price is 1.1539, that's just the 1 pip difference. So that will be 1 pip. Okay. But if that changed to 1.1548, okay, now we move this decimal point. So now that's 10 pips. Okay. So this will be a 10 pip difference. Okay. Do you see that, Sabrina? That's 10 pips difference. So sometimes what I like to do is I just like to look at this as whole numbers. Most of the time, this number right here doesn't even, I try to keep it out of my mind. I don't even look at this 1 right here. I don't even look at it. I just block it out of my mind. And I look at this more so as if this was 1,538. If this number was 1,538. So if we went from 1,538 to 1,550, type in the comment section how many, what's the difference there? How much did it go up? How much did it go up? Right, Jamie, right. You see that, Sabrina? You see that? How many it went up? 12 pips. Yep, cool. So I look at his whole numbers, like that makes it easier on us so we don't get too caught up in thinking that this is like some weird formula. This is just like, if you had $1,500, okay, $1,500, and somehow you grew that up to, oh yeah, like, I guess 1,638. $1,538 to $1,638. Only number that changed was this number right here, that 5, right? And this is the hundredths place. So you went up 100 pips. Okay, that's it. This right here was the 1 place. So you went up 1 pip. This was the 10th place. So we went up 10 pips. And in this situation, this was the, okay, well, this was the 1,000th pip. So this went from 1,538 to 2,538. That's a 1,000 pip change. So we went up 1,000 pips. So this is the 1,000th place. So try to think of it like it's money most of the time, okay? And in our situation up here, we had, I know this is the 1,000th place, so we got to think of this as 10,000. So I would just, in my mind, I would just call this 11,538. I like that, Jado. Seeing them everywhere. To 21,538. And now you can easily see it now, like, oh, this is a 10,000 pip difference. This is $10,000 difference. If we were just talking about dollars, it will be easy to see that this is 10,000. With pips, we kind of get confused because we see decimal points and we just think we overthink it. But yeah, I'm going to over teach. So I know you probably got it by now, but I'm going to over teach so you can have other ways to look at this and you won't forget it. Okay. But yeah, because pips are just so important. It's so important. And when you trade it on a fly later on, you're going to really need to have this. You're going to need to have this down packed. You're going to definitely need to have this down packed and be like, okay, no, I just get it. I just get it. So yeah, yeah, that's the 10,000 place right there. Trying to think of anything else I want to mention on this topic right here. But once again, this doesn't really matter. It's just a fraction of a pip. This is the 1 place, the 10 place, the 100 place. So most of the time though, we're right in here. Okay, most of the time we right in here. Let me see, I'm gonna throw a little trick out there on everybody. Let me see if y'all can catch this right here. So if we are currently at, the price is 1 point, let's say the price was 1.9998, and we go to 2.000, one. How many pips did we change? How many, what's the difference? You're welcome, Sherelle. Okay, I'm seeing a lot of good answers in here. And if you don't get it, type a question mark. It's okay. It's okay. We all going to get this. It's all right. It's no judge zone at all. If you don't get it, I'm more mad that you don't ask than I am that you ask the question and say, I don't get it. So please, 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 if you don't get it, do not stay silent. Everybody who said 3, you're correct. Everybody who said 3, you're correct. Okay, Sabrina said, why isn't it 2? Great question. So 2 would have been, right, let's add 1 to this. This plus 1, sorry, I'm trying to add a plus and then a 1. All right, if we added 1, that would be 1.9999. Okay, that's just a plus 1. We just moved this by 1. Okay, if we add another 1, that would take us to, now we go to 2 because we got to add 1 to this. Okay, it's kind of like, remember how we used to do math like this in school where you do 1999 plus 1, and we got to add it to everywhere. So this will be a 0, carry the 1. This will be the 0, carry the 1. This will be the 0, carry the 1. Oh, this is 0, right? 1, 0, 1. I did, because 9 plus 1 equals 10.
And then plus that.
And then plus, you got to carry the 1 again. We got to carry the 1 over. 0, carry the 1 again. 0, carry 1 more 1, and you just get a 2. So it's just like adding up in math. Just add this right here, 0, 1. So now we at 2.0000. But we're trying to get to 2.001. So we got to add 1 more 1. So we do plus 1 again. And now we get 1, because 0 plus 1 is 1, 0 plus 0 is 0, 0 plus 0 is 0, 0 plus 0 is 0. It is 2 plus 0 is just 2. So that's why it's 3. Sabrina, makes sense or no? Let us know in the chat. Yeah, okay, cool. Cool. Anybody else, any other questions, Sabrina? Anybody else got another question? So that's where it could get crazy, because we went from 1, not crazy, but it just looks a little confusing. We went from 1.9998 to 2.001. It looks like a big difference. It wasn't a 10,000 pip change. It was only a 3 pip change because of where we were. Okay, I brought that example up because that's the only time when you really need to think about this other number. But for the most part, I'm only dealing with this down here. If it's 1.1538, I'm just looking at 1538. And if I want to grow this by 30 pips, I'm just like, all right, I'm just going to add 30 pips to this. And my take profit is going to probably be 1.568. Something like that. That's it. You know, I'm not even thinking about this number that much. It's going to be there though. You're going to have to type that number into your broker app, everything. But I just don't want you to get too caught up in this, because a lot of the times it's not even going to be, that's not part of your math when you're mathing. That's it. So if you keep anything I could do to simplify it in my head, if I could take away this number and don't have to think about it right now. If I could take away this number, don't have to think about it right now, I will. But once these numbers get high and we about to convert over to a new 10,000 place, then we do gotta calculate that in. But we'll get used to that. We'll get used to it. I just want to make sure you get the idea of this is the 1 pip place. So when we going up, we starting with this and we just moving this by 1 pip. We go from 38 to 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 90, 91, 92, 93, 94, 95, 96, 97, 98, 99. Once you get to 99 here, once this is 1.1599, if we go up one more pip, what's that next number, y'all? What's the next number after this if we go up 1 pip? Great job, everybody. Great job. Yep, we go to 1.1600. You got it. I'm telling you this right. If you can get this right here, I'm glad we're going over it now, because sometimes we do, or other people, they try to teach you this later on when you're already about to jump in the trade, and it just adds too much confusion. So a day trading school, we trying to get this into your subconscious early, so later on it's not too much to think about. You may have to go back and be like, hold up, wait, where do I put this or put that? But when you go back to your notes, I hope you're taking notes. You're like, okay, I get it. Okay, this is the 10th place. You know, they said this is a 30 pip trade, so I got to add 30 to this number, to that 38. And if it goes over, you know, it's okay. It goes over, it just bumps up this number here, which you guys just did. I said add 1, and you bumped up this number here, which also ended up bumping up this number here. So we're fine. All right, cool. So that's it. Like, this is the most math that we're going to do. Okay, so if you can do basic math as far as like this number plus that number, and you can track decimal places, you're okay. You're going to be good. We're not going to do any calculus. We're not going to do any kind of like complex analysis. This is it. All right, cool. All right, thanks, Nicole. Appreciate it. Okay. So let's go ahead really quick and let's watch a quick video. Let's watch a quick video on pips, just so we can once again put this into our subconscious. When I play this video, if you cannot hear the sound, just do me a favor and type sound in the chat if you cannot hear it.
A pip is a measurement of the price change in a currency pair trading on the Forex market. More precisely, a pip is, in most cases, equivalent to 1/100th of 1%. This is true in most cases because, in general, currency pairs such as the US dollar-euro are quoted to the 4th decimal place. However, this is not true for the US dollar-Japanese yen currency pair, which only quotes to 2 decimal places. Let's look at an example. Sally, a seasoned Forex trader, is looking for a quote on the US dollar-Canadian dollar currency pair and sees that it's being quoted at 1.1005, and she wants to buy $10,000 worth of Canadian dollars, which at the quoted price would mean she has to pay $9,086.78 US dollars, as established by the equation 1 over 1.1005 times $10,000. As she's watching, the pair sees a 1 pip increase to 1.1006, meaning the US dollar appreciated relative to the Canadian dollar. She now only has to pay $9,085.95 for the 10,000 Canadian dollars, determined by 1 over 1.1006 times $10,000. This is a difference of 83 cents. Now, 83 cents doesn't sound like a big difference, but when a position is leveraged 50 times, That single pip equals $41.50.
So this part right here is pretty important. In Forex, we have this strong advantage to be able to leverage a position. So if you know that a currency pair is going to move 5 pips for whatever reason, you just know this, or you have a strong inkling, or you're confident that it's going to move 5 pips. You know, that 5 pips may only get you, like they said, about 83 cents or something like that, right? It might be a 10-cent per pip move. However, you can leverage your position, right, by working with a Forex broker, and they'll give you this ability to, they'll give you pretty much a loan. And we'll be talking about this a lot later on in high school. They'll give you a loan to be able to maximize your position times 50. So for every pip move, it's like you actually get that times 50. All right. And that's how they got this $41.50 price here, because they multiply 83 cents times 50. All right. So they pretty much say whatever money you have, they'll multiply it by 50. So if you had, so if you had $100, they'll pretty much multiply that by 50, and they'll give you, what is that, $5,000. Okay. So that's the cool part about it. I just wanted to kind of put you onto that early on, so you can, as you start messing with these numbers, at first you're gonna be like, 1 pip, that's not really a lot. Like, that's only, you know, it's a penny move. It's a 3-cent move or a 5-cent move. But I just want you to just keep room in your head to know that later on you'll learn that we can leverage that. 1 pip can actually be very, very significant. 5 pips can be very significant. 20 pips can be very significant if you leverage that position using a Forex broker who will give you leverage. That's what we call it, leverage. And you'll also get into lot sizes later too. Is the leverage 50 or 0.50? The leverage is 50. Yep. It's called, you can do like a 1 to 50 leverage in America. For all American regulated brokers, 1 to 50 is the max. But in other countries, and like, you can do 500, right? So they'll give it to you to the point to where they'll 500x your position. So now you can, even with a small amount of money in your account, like a $50 account or $100 account, you could still open up a big position. Okay, but you still got to be careful, because just like you can grow your account really fast, you can also blow your account really fast. So you got to be really careful with that. Okay, so we'll talk more about that later. I just wanted you to at least get a little bit more of this. Let me finish this video though.
And currency can easily move 70 pips a day. This means a $10,000 position at 50 times leverage could see gains or losses in excess of $3,000 throughout the trading day. Pips are the most basic unit of measure in Forex trading, so it is important to learn how a pip's value relates to currency positions in Forex trading.
Okay, cool. So as you see, we are back on our chart. And I just want to show you, because remember, we were talking about this whole idea of x-axis and y-axis. The x-axis, remember, is just our date. Y-axis is the price. So I want to zoom in here so you can really see what's happening here. This is the British pound versus US dollar. And I'm just going to go up very slowly. Look at the price over here and just look at it. I'm just trying to zoom in so you can really see this. Okay, so here we are right now with the bid and ask price. The ask price is currently 22.25, 8 point, you know what I mean, with that extra fractional decimal point of an 8. This is 22.24. So they're really close. They're off only about let's see, about 0.6 of a pip. Okay, remember we talked about a pip. It's not even a full pip. It's only 0.6 of a pip. That's currently our spread, which is the difference between the ask and the bid price. Okay, that's the difference between those two. So the spread is usually what we have to pay to get into a trade. No broker is going to let you get into a trade and instantly make a profit, right? They're not going to make it to where on one exchange you can buy at this price, and then on this exchange, you can, then on their same exchange, you can buy it you can sell it at a higher price, right? The bid and ask are always going to have a difference, and now you have to wait for the price to move to make profit. It's like, but right, I just want to stop that there, first of all, okay? No broker is going to let you on their exchange get in and get right out in a millisecond, in 10 seconds, and 5 seconds, and make a profit. All right, it's not going to happen that way. There's always going to be a difference in between the bid and the ask. Now, what some people do with other kind of instruments, this is what flash trading and quant trading is they'll buy it on one exchange. They'll buy something like oil or gold on one exchange, and then they'll go to another exchange somewhere and try to sell it off really quick at a higher price. Okay, and they're kind of cheating, because they're taking advantage of their computers being close to these exchanges, and they get these prices really, really quick. We'll talk about that more later. It's way more advanced. This is why trading with the bot can be really, really important, because you want to keep up with how some of these big firms are trading. So we'll talk more about that later. But that 0.6 is just the spread, okay? That's the broker saying that we need to make our fee too. So as soon as you get in, we're not going to give the price you want to buy at is already going to have our fee baked into it. So they already make their money. As soon as you open up that trade, they're making their money instantly, because they're selling it at a price where they know that they can get a profit off of, because somebody else is going to be selling it at a higher price. So how do I know? This is Sabrina's question. What leverage I can use if my leverage is from 1 to 500, but only have $200? Okay, yeah, we'll talk about that in a different session. I just don't want to confuse people here, but there's a few different websites that you can go to help you do that calculation. And I'm going to show you how to do that as well. But pretty much the main thing is that I just want you to notice they'll give you all of that leverage, but you still can't use, in one position, you can't use more than like 50, 60% of your account. So once your account is like $100 negative, they're going to close that trade out. It's called a margin closeout, because they're saying like, hey, you're over risking your account. It's dangerous. You're about to blow all your money. We're going to just stop and just close you out that position. Okay. So that's something they won't let you do, but we'll talk more about that later, so it makes sense. Don't want to jump ahead too far. Okay, cool. So yeah, I just want to show you this right here. I'm gonna go up alongside this right-hand side and just look at the price changing. Okay, let me start here. So the price is here at 23.49, just one tick up, 123.50, 23.51, 23.52. Every time we go up a little bit, the price is changing. So if you look over here, the price was way up here at some point. Okay, the price was here, and then it just started falling down. It was at 25.88, 25.86, 25.87, 25.83, 25.82, 25.81, 25.79. Okay, it went down and it ended up going way down to 1993. So let's see if somebody can help me do this difference. Okay, so we were up here at 25.88, 1.2588. And we dropped down to 1993. Oops. Okay, so how many pips? What was the difference? How much changed from this point to this point? How would you do this math? What's the easy way to do this without overcomplicating it, making it hard for yourself? Yeah. Subtract. Yeah. What's one of the greatest tools we can use to do subtraction? There we go. Calculator. There we go. I got my son right here trying to get him to help me out. Yes, a calculator. Yes. Nicole said 595. Brad said 595. Yes. Sometimes you can do it right up in here. On Chrome, they give you the ability to just do 1.2588 minus 1.1993. Oops, I got a comma here. And yep, Nicole, Rab, thank you. They said 595. Exactly. Yep, 595 pips. Sheesh, that's crazy. That's crazy. But okay, but this is also over several days. This was from June 7th to June 14th. So 7 days. 7 days, it dropped 595 pips. Huge, huge amount. So really quick, just to some people like, how much money is that? It depends. It depends on how much money is in your account, all kind of stuff. But let me just show you. This is GBP, USD. What was our numbers again? It was, yeah, 2588 to 1993. Which is a sale position. Calculate. So on a very, if you only bought 1 unit, remember this is saying if you only purchase 1 unit, so you went and bought $1 US and you held it and against the the British pound, just one, there's $1. You say, I'm about to buy this US dollar, I'm gonna hold it because I think the price is gonna go down 595 pips. Well, guess what? Cool, good job. You just made 5 cents pretty much. 5 cents plus 95 of a fraction of a penny. Okay, that's because you only bought 1. Now let's say you say, no, I'm about to take $1,000, put that in the cut. 1,000. And I'm gonna hold that for a little bit and see if the price changes in 7 days. It does, it changes, you make $59. So now you can go ahead and change. You had 1,000, you can cash out, and now you got $1,059. So cool, you made a $59 profit. Now, as you get bigger and bigger, you start trading more and more. You could trade 10,000 units. Now you made 595. Nothing changed, right? Besides how many you bought. The open and close is still the same. The strategy is still the same. The amount that you risk is still the same. Everything is the same. Only thing is you're buying more. Okay, so this is why institutional investors are able to buy so much, and their trades are worth so much. $59,000 on that same trade. So somebody made 59 cents on that trade. Somebody made 59,000 on that trade. Somebody also lost 59 cents, and somebody also lost 59,000 because somebody thought this was going to go up and not go down, but it ended up going down. Okay, so we'll talk more about this later on. We'll go deeper into how to calculate your profit, how many units you can buy, things like that. We'll get to that. But now I just want you to see the power of pips. 595 pips can mean a little or a lot. We all want to start low. We want to start with just, something like this. We just want to start with about 10 units, 100 units, okay? And we're gonna be actually I think the most we're gonna start with is like the least we're gonna start is 1,000. That's like a nano lot. Okay. So in between 1,000 and 10,000 is where most of us is going to start at. Okay. Which is totally fine. So you making in between 59 pips per trade. $59 per trade and 595 per trade. It just depends on what your amount is. So it's cool. That's where we're going to be at. And then later on, we'll work our way all the way up. Okay. So I wanted to show you that right here. Another way that you can do this goes into the last thing I wanted to, the second to last thing I wanted to cover in today's session is we have these tools over here. Okay. We have these tools that help us in a quicker way see how many pips this would have been. So there's a tool over here. If you go to this first one, it's called where we can pick what do we want our cursor to look like. We can do a cross. I like the cross because it shows us the date at the bottom and it also shows us the price to the right. Or you could just do a dot, you know, and digest. Oh, I guess they all do that. That's cool. Yeah, they all do it. Okay, not this one, not the cursor. You don't get to see the lines that show you what's what. The eraser, we can erase some things. We can erase anything off the screen. Cool. So these are the tools, right? I'm not going to go over all the tools because we have a course that you have access to called Tools of the Trade. And I really, really highly suggest that you study that. So in between these day trading sessions, always go watch that course, specifically the trading view section, because you're going to see a couple different sections in there about different tools that come with trading. The main one I'm talking about is how to use trading view. And it's going to break down how to use these different features. Okay. So the tool I want to focus on right now is the one that's called the info line. The info line tool. The info line tool is like a trend line tool. Watch this. I'm going to do the trend line. The trend line goes from here, right, to here. Cool. It's just a line. You can make this do whatever you want. Okay. But specifically, I want to show you the info line tool because it's like a trend line, but you also get some extra information with it. So if I go from this top point, you click here, drag it down to this bottom point, it gives me some information. Specifically, it says 592, right? Which is pretty much that number that we said, but it's off a little bit. 595, there it goes. So it tells me right here from this point here to down here, it's 595 pips. It gives me that information, which is super helpful. Okay. It lets me know how many bars that was, 5 bars, because this was about 5 days. If I change this, you'll see that. 1, 2, 3, 4, 5. Okay. I'm gonna go back over here. It tells me the slope. This is a 109-degree slope. Awesome. How many pixels, if you want to be that specific on the screen, this was 374 pixels. 5 bars, about -7 days. And then also a 4.9% change, also very key. It shows you that the price changed by about 5% over those 5 bars or over those 7 days. Okay, so a lot of information here. So if you're just trying to see in a quick way, like, man, how many pips was this right here? Wow, that was a big drop. And then just do that and you'll see, sheesh, 880 pips. Oh, wow. You know, that's crazy. 6% change. Wow. You know, we get that with that tool. That tool is super simple. It helps us out in a major way. Okay. So once again, Tools of the Trade is a course that just goes a little bit more in depth with these, and then you could try them out yourself, and then you'll find your favorite ones. That's what I do. I go over here and I click the star next to them, and you can now favorite your ones that you like, and then they'll pop up in this like floating toolbar for you to always have access to. So now I always have my favorite tools right here for me. So if I want some text, it's just right here to say, I love trading, you know, real quick, and it's right there. You know, if I wanted to circle real quick, it's right there. If I want to do a square real quick, it's right there. Everything is right there for me in this very close area, okay? Okay, cool. All right, last thing I want to talk about today to end off grade 1 is the different kind of financial instruments. So in TradingView, over here, you can create a watch list, okay? And you can create a watch list of all of your favorite currency pairs, crypto, stocks, everything you want. So if you click up here, specifically symbol search, top left-hand corner, we can select, look at this, whatever pair we want. We can look up Tesla, we can look up oil, and see if we wanted to trade oil. We can look up gold if we wanted to trade gold. Forex gold is AAU, sorry, USD if you trade against the US dollar. So that will be this one here. Uh-oh. One of my trades is about to kick off, Euro USD. So this is the price of gold, and as you see, the price of gold is going down. It's not going down too much. It's actually still very high compared to where it started off the year at. So it's not even really too low. It was 2022. Yeah, down here. So it's still up for the year, but just showing you what it's looking like. So yeah, the price of gold is fluctuating. Okay. What else? We could trade Bitcoin. Over here on my watch list, I have Bitcoin. 20,000. I think it's about to drop down. I think it's about to make another drop. T.Bot said it's about to make another drop. So we're going to keep our eye on that here in a second. That was crazy, man. Ethereum as well. Gold. US 30 is another financial instrument. This is like the top 30 US stocks. Okay. A lot of people trade this. Okay. So all of these different instruments you can trade, and you can create a watch list of just your favorite ones. T.Bot currently sends signals for these first 13 here that you see. Australian dollar versus Japanese yen, Australian dollar versus US dollar, Canadian dollar versus Japanese yen, the euro versus the Australian dollar, the euro versus the Canadian dollar, the euro versus the US dollar, the euro versus the Japanese yen, the British pound versus the US dollar, the New Zealand dollar versus Japanese yen, New Zealand dollar versus US dollar, the US dollar versus Japanese yen, and the British pound versus the Japanese yen. This is our focus right now. It's just 13, 3, 6, 9, 12. Yep, 13 pairs. You know, that's our focus. This is our starting point. This is where we at, so we don't get overwhelmed. And yeah, so you'll see signals coming through with these kind of pairs. Remember, sometimes we just make it short by naming them with an acronym: AJ, Australian dollars, Japanese yen, AJ, AU, CJ, EA, EC, EU, EJ, GU, NJ, NU, UJ, GJ. Okay. So if this makes sense to you, if this puts some things into perspective for you, do me a favor and type unlock in the chat. If you have any questions, type a question mark so I can know to hold up and wait for you to get your questions out. Okay, thank you, Sherelle, Jamie, Sabrina, Livy, Andrew, Nicole, Rav, Michael. Thank you, everybody. Okay, Sabrina, yes, Sabrina, you got questions? This is looking good. So yeah, this is going to be our completion of grade 1, where we focused on pretty much space. All right, and next we're going to move on to time. Okay, we're going to move on to time is next. We're going to focus a little bit on time. Time is very important, but right now we got our space all good. We understand that we have tools here. We have the price and the time down here. We're going to go more in depth on time because we definitely went in depth in price. We talked about pips. We talked about the bid and ask price, and we also talked about the spread a little bit. And now we're going to definitely go more in depth into time a little bit, just to make sure we're on the same page with time frames, time zones. Yes, replays all get uploaded to the course section. You can watch this as many times as you want inside the Day Trading School course. Okay. If you got any more questions, remember, you can always reach out to us on Slack. We got a bunch of coaches on deck. Everybody's passionate about helping you out. So definitely take advantage of us. Just don't take disadvantage of us. Use us. Don't misuse us. Okay. Yeah. Appreciate everybody. Thank you so much. Thank you so much. Yeah, Sabrina, we said we're going to cover that question later on. Okay, we'll cover that a little bit later on about the leverage. We didn't want to confuse people right now talking about that right now. But if you got that question and you need answers to that now, let's talk about that on Slack. If that's really important to you right now, it's all good. This is great, man. I really appreciate everybody's dedication. Remember, you are in control of your financial future. The more you learn, the more you earn. The more you learn, the more you earn. I've learned that the hard way, thinking that I just know it enough and like, okay, I can stop here, but that means I'm also stopping my potential for how much I can learn. I mean, earn, right? And learn, shoot, for real, for real. If I just say I'm good here, now I'm putting a block on myself. And remember, we're not here to block, we're here to unlock. Thank you, everybody. I appreciate y'all. See you in the next session. Peace, unlock.